And I have watched him move his career through designing programs to trade to writing algorithms. And today, I'm just so pleased to have him support this community by sharing his knowledge. Please help me welcome my baby brother who's all grown up.
Thanks, everybody. Thanks for being here. Thanks to my sister. Thanks for setting this up. I'm really happy to be able to come and speak to you all and be part of HHC and really give back to the community. So, I'm going to talk to you guys today about. Oh, thank you.
His big sister's always take care.
That's right. Well done, Michelle. It wouldn't be like a project without that. So, what I'm going to talk about today is what I consider to be an investing super cycle in the cannabis industry. We're at the very beginning of a massive move in this whole space. I think that's why you're all here tonight. In some way, you can feel that's coming. And so, I'm going to walk you through what I'm doing with my own personal capital. I manage my own capital and other high net worth investors. What I tend to do is, along with algorithms and the way I manage money using computers, the other part of our business. The other part of our business, is that better?
Pump up the volume.
Okay,
baby.
great. The other part of our business is old school gathering information, meeting with management teams of companies, and building positions and building portfolios. That's what we do. So, before I get started with the whole step-by-step approach to how we're putting together cannabis portfolios, let me just ask a couple questions. First, just by show of hands, how many of you are HHC? Okay, great. And this is obviously a discussion about investing in the stock market. So how many of you own stocks or have ever owned a portfolio? So we're familiar with the terms. Great, all right. I got one more question for you. How many of you smoke weed or have in the past? Okay, listen. It's that reaction that you all just had that lets us know we're at the beginning of the investing super cycle. I'll make a commitment to you. I'll be back here in 10 years. I'll ask that question. Nobody will laugh. People laugh now and we all think it's fun because you know what? It's kind of illegal, right? Federal government still says it's Schedule S1. So it's kind of fun. We remember college or what have you. It's the fact that people still think that way. And you guys are enlightened. You're here tonight. You want to invest. And you still think it's a little funny. It's because of that feeling that we're right at the beginning. The tsunami of capital into the space hasn't even started yet. And these stocks have been public for a couple of years. You could have messed around with them for a couple of years. It hasn't even started. So I'm going to go over all with you how I'm doing it, why we're doing it, what stocks we're looking at, and groups. I do feel like I have to start with the regular disclaimers, right? The safe harbor. This is about investing in stocks, guys. You can lose part or all of your money. Okay? I'm sharing information about my own portfolio. I'm not telling you guys to run out and buy it tomorrow. You got to do your own risk management. You got to think about what's right for you and the amount of capital to put to work. All right? So we're all clear on that? All right, great. It could be hyperbolic, you're thinking. How can I stand up here and say we're at the start of an investing super cycle? That's a major comment. And in order for me to really help you understand why I feel confident saying that, let's go back in time for a minute to my childhood, if you will. Just indulge me. My dad has been doing this investing process for 50 plus years, and I've worked with him my whole life. He started out as an analyst on Wall Street for big institutions, guys like Fidelity and Vanguard and Putnam and Dreyfus, and he would write 50-page research reports about all different kinds of companies. And he'd come home at night, and he'd talk to us at the dinner table about these investments. And so from a very early age, I remember all these stories. And my dad's favorite story is worth discussing tonight. because we're talking about investing super cycles and the beginning of them. And my dad's biggest success that put him on the map in Wall Street was investing in a company called Columbia Broadcasting Systems. At a time when TV went from black and white to color. So you had a watershed event. And he went and met with management in the C-suite, but his biggest piece of information, he always told us, is that he sat down with the gentleman handling advertising that nobody really paid attention to at the time, because it was a small part of the business. And that guy laid out for him what was going on in the industry. Massive amount of ad revenue coming in because eyeballs were looking at color screens. And it laid out an investing supercycle in CBS that went on for decades. Now let's fast forward to my experience, right? I graduated Boston University, 1993, I got into business. My dad and I flew out to California to an internet technology conference, 1993. People were still opening mail, with their finger. And I sat down in an investment meeting, one-on-one with the management team of a company that told me, look, we have a website. People are going to open their mail on this website. We have all the news on this website. And at the time, the market had moved from dial-up to high speed, black and white to color. The high speed was the watershed event. More eyeballs, more advertising revenue. I walked out of that meeting, I said, Dad, you're not going to believe this. You got to go see this company. It's the greatest idea I've ever heard in my life. He laughed at me. He said, son, it's the first year of the business. What do you mean it's the greatest idea you heard in your life? This is the first company. Literally, you sat down and managed it. This is the first company. I said, you got to listen to this, Dad, because I'm telling you, this is the CBS story all over again. He said, okay, I'll be the judge of that. So he sat down in the meeting, 45 minutes. It was a fun meeting. Every 45 minutes, you could see different companies all day long. We covered 8 companies a day. So I covered 8, my dad covered 8, and then we would swap the next day our favorite names. My dad came out of the meeting and he said, we got to buy stock. And it was Yahoo. Yahoo, the stock was 30. 30. 7 years later, it's 450. Right? It's 15 times in your money. That's how you build wealth. You do it by putting capital to work in the right names at the start of an investing super cycle. That's how, a lot of risk, massive reward. We'll get to that later. We'll talk about that. All right? In fact, I asked you guys to grab some pens and papers and whatnot. I left it up there. You have your own. We're going to use that later. I'm going to walk you through some steps of what we're doing. We're going to write down step by step some information we've gathered from meetings with management. But that was 1993. That was the internet. That was lots of fun. And that's been paying dividends really my whole career. It's just been rolling along. Now, you can't stay in one stock, right? You have to do research. You have to understand when it's time to move to the next idea. But that investing theme got started in the early 90s and has been rolling along. In the year 2000, if you remember this, guys, the medical community mapped the human genome. You all remember that? That was a watershed event. Therefore, there was a major investing cycle coming after the human genome was mapped. And again, we did research. We met with management teams. We said no to a bunch of companies. And we settled on a company with the name Illumina. I don't know if you're familiar with this. Is anybody familiar with that name? Okay. All right. Jay Flatley, the CEO, would come into our office once a quarter. We'd have 4 meetings over a year with him. Spent a couple hours. He'd walk out. My dad and I would look at each other and say, that was the greatest idea ever. Now, what did he just say? Because he was using, like, medical terms that, 5 and 7 syllable words. We needed a dictionary to figure out what the heck is this guy talking about. But we condensed it. We finally figured it out after, like, the 4th meeting. And this is what we do as investors. We try to put it into terms that we can understand. Take it out of the genetics world and understand that this was just a Xerox copy. This was just a Gillette razor investment idea. Illumina makes machines that allow research departments, big drug companies, whomever, to use genetics to create targets, to create drugs, to cure people. They make the machine, okay? And they make consumables that go in the machine. And so as the business grows, what we call in our business in the stock market, when you're investing, you look for hockey stick type growth. It starts off by selling the razor or the Gillette, or the Xerox copier, and then when they start selling a lot of ink and a lot of blades, the business explodes. Okay? So I get to today, and I'm talking to Michelle at dinner, and I keep saying to her, this is unreal. I've never seen an opportunity in the 30 years I've been doing this as significant as the cannabis investment fee. It's just, and I'm going to walk you through now, why I feel that way, what we're going to do to make money on it. How we're going to build portfolios. By the way, IMMINENT, just so you all know, we paid $3.50 for the stock in 2003, and last year it hit 370, right? That's 10,600% return in 15 years. That's how you build wealth. So we have to find investments at the beginning of super cycles, and then you got to deal with the volatility, but if you can continue to do your homework and make it through, you build wealth that way. So I feel like we're standing here today, and you all are here today, and I applaud you for being here, because we are at the beginning of that cycle again. And this time, to me, I say it's easier than before. The reason I say that is understanding the internet in 1993 was not that easy. Okay? What the heck is the internet at the time? How does high speed help this? Or certainly understanding genetics. I mean, it took an unbelievable amount of effort to figure out how mapping the human genome was going to make money. We all know weed. We get it. We get it. It's not hard to understand. It's a simple business model. Consumer packaged goods. Retail. This is easy. And it's a product that sells itself. So what we need, obviously, are some changes along the way, some watershed events, right, that let us know the investing cycle started. So, like I said, these stocks have been public, some of them for a couple of years. I didn't touch any of them. We started buying these stocks August of last year. Anybody know why?
Legalized.
No.
Recreational in California?
All good guesses. I'll tell you why. All good guesses. Not that what you're saying is wrong, but the reason we bought the stocks at that time, watershed event. From an investing standpoint, you're correct in what you all are talking about. From an investing standpoint, Constellation Brands put $4 billion into canopy growth. That was the dinner bell. That was the beginning of this. These stocks exploded higher, then collapsed, came right back to where they were. Might make you think maybe nothing's happening here. It was a watershed event. So do you know this story, guys? Constellation Brands, they own, they're a wine and spirits company. They own Corona. Okay, they have a lot of big brands. They're clearing house, rearranging their business, and getting ready with canopy growth to sell sparkling beverages with THC in it. Okay, so what we've got here is that's actually $4 billion along with $1 billion they'd already committed. So that's $5 billion total they've put into canopy growth. CGC is the symbol. Charlie, Golf Charlie.
What's canopy growth?
Canopy growth that's a good question, and I would say, we can get into more of it later, but I would say the best way to describe canopy growth is it's the blue chip investment of the entire cannabis space. I mean, I could stop this right now and say, own canopy growth, good night. I could, okay? And it might actually help a lot of people in here, because I speak to a lot of people, a lot of investors, a lot of people ask me about these little stocks deep down in the muck on the pink sheets. Avoid it. You don't need that kind of risk. The amount of capital that we can make on canopy growth over the next 3 to 5 to 10 years is a lot of money. You don't need the peanut stuff. So if you're going to invest in the space, in my opinion, again, this is what I do with my own personal capital, okay? I don't know how you guys want to take your risk, but that's the centerpiece of my portfolio, canopy growth. And everything grows from there, okay? Everything grows from there. So there's really two things that we have to look for an investing super cycle to begin, right? If we're too early, we have to wait a couple of years, then it doesn't really help us. I didn't put money to work in 2016. You could have. I mean, canopy growth was $5. Now it's almost 50, right? Or 42 today. But the real money is going to be made in the next 3 to 5 to 10 years because the watershed event was 1, Constellation Brands making the investment, 2, Altria. Altria owns Marlboro Cigarettes. They put $1.8 billion into the Kronos Group. C-R-O-N is the symbol. Charlie, Romeo, Oscar, November. So what you have here, and I call it a watershed event because, I mean, I've been doing this 30 years. My dad a lot longer. The way you make money in the stock market is not because I'm buying stock, you're buying stock, and you're buying the stock, and it goes up. That's not how it works. It goes up over a series of time, 10,600% in 15 years, because institutional money invests. What's institutions? It's sovereign wealth funds in Saudi Arabia or Sweden, which are starting to buy these stocks. It's CalPERS, right? Pension plans out in California, all around the country. These are billions of dollars that decide to commit to a segment or a theme. And as individuals, we want to get in ahead of that and ride that tsunami. That's what we're trying to do. So we have to wait for watershed events that brings them in. And the first is the Constellation Brands and the Altria, because this puts these big pools of capital at ease that this is a real market. They don't feel silly like we all laugh. They're going to go, think of the guy who runs CalPERS, right? He's running a major pension plan in California, and he's going to go to his board and say, I want to buy a marijuana stock. They're going to say, get out of here. You just lost your job. Here's your severance. You can't do that. But when he goes in and says, hey, Constellation Brands, which, by the way, we own the stock, just put $5 billion into Canopy, and Altria put $1.8 billion into Kronos, I think it's time we start doing some research. And the board says, absolutely, it's real. So that was the most important thing to me. The second thing, of course, is there has to be hurdles. It can't be easy for everybody to see. It has to be a bit confusing. And God knows that investing in cannabis right now is confusing. Right? We have states that approved it. We have the federal government that says it's an S1 narcotic. This keeps a lot of people out of these stocks. So we get watershed event at a time where people don't really believe it. And that's the investment opportunity. That's why I'm putting capital here. So, let's move on. A couple of thoughts on how we know perception's changing. Because even though we laugh, things are changing, right? 37 states and territories have approved either medical or recreational or both. That leaves out only 15 states. This is real. I saw today a Gallup poll, 66% of Americans think that marijuana should be legal. You can't get 66% of Americans to agree on anything like that. I mean, it's incredible. There's a couple of bills I'm going to get to in a minute. I guess maybe I'll get to it now because this is important. No, I want to talk to you about something in a minute. We'll get to that in a second. Let me just say this. We know things are changing because of these statistics, but we also know it's changing because you follow the money when you're investing. And if you look at the tax revenue coming into states that have approved it, you know the federal government wants a piece of that. There's no way the federal government's going to let states get away with that. It's a massive amount of money. I mean, Colorado went from a deficit to a surplus in a year. So did California. Okay? California's a little dicey, my friend. I won't put money in California. They're in the process of causing problems from marijuana. I'll get to that at some point if you want to chat about it. Okay? That's an interesting point to talk about. Anyway, I digress. A couple other thoughts about that. Also, I think this is fairly important. The single biggest jobs grower last year, in other words, the president's always talking about creating jobs, right? The industry with the biggest increase in job growth last year was cannabis. I mean, what president, what congressman doesn't want to continue to do that, to build that? And now this is something that's, I've just been in a meeting with management of a dispensary here in Florida and other states as well. The health department of Florida right now is considering allowing doctors to prescribe medical marijuana for opioid addiction. This is a major platform for the president. Like it or not, it's a major platform, and everybody agrees with it. We have to deal with opioid addiction. Think about what that will do to the marijuana industry if it first gets passed in Florida and it moves statewide. That's significant growth in this industry, okay? These are some of the things that are happening right now that let us know the tide's coming. It's starting to happen. So we got to get involved. So let's talk about it. Let's break down investments now, okay? You can always invest in an exchange-traded fund if it makes you feel comfortable and you want to avoid single stock risk. So MJ, letter MJ, Mary Jane, right? It's an ETF, exchange-traded fund. It's like a mutual fund, right? It trades on the New York Stock Exchange. You can get in and out whenever you want. And it owns all of the major Canadian growers. There's nothing wrong with that. Yeah, go ahead. Did you say no? Okay. Yeah, so you can always do that, okay? Inside of that, I don't like a lot of companies that MJ owns, and so I don't choose to do that. So what I'm doing is the research to find the companies I think are going to outperform, right? And so we know Canopy is without a doubt the gold standard. So you start there. In fact, the CEO of the company, Bruce Linton, was at a meeting today and told Wall Street they're going to do better than $1 billion in sales in the next 12 months. Wall Street was expecting $788 million, so it was a big jump from what the street was expecting. So I think that's without a doubt the first place you go. Then you got Kronos because of Altria. I like Aurora, ACB is the symbol, Alpha Charlie Bravo. They've got there's an activist investor involved with them who has a $3.5 billion position in Procter & Gamble. Guys, just so you know, these are consumer packaged goods. That's what this is. Forget about thinking about cannabis and smoking weed. It's a consumer packaged product. So from a business standpoint, we have to break down the investment based on comparing it to other consumer packaged goods and doing our research. So when, in this case, Nelson Peltz is the investor, teams up with Aurora to give them advice on strategic partnerships. And he owns $3.5 billion worth of Procter & Gamble. I'm not saying that Procter & Gamble is going to do anything, but obviously the guy's connected to the right consumer packaged product companies. So Aurora is something to take a look at, okay? And there's two other companies in Canada. These are Canadian growers, okay? And Canadian brand builders, okay? And Canadian guys who have war chests of capital. This is the thing. This is going to be a dogfight for these companies to make money and be successful. There'll be a lot of failures. So you need a cash treasure chest behind you to drive your brand. And these guys who have Constellation Brands or Altria or whomever, Hexo is one of my names that I like. HEXO is the symbol. Molson Canadian has a joint venture relationship with this company. Okay? So you've got somebody with a lot of cash behind it, getting ready to come out of the beverage in the fourth quarter of this year. So those are my favorite names there. I stay away from growers. I stay away from plain growers. Now, Let me relay a story to you. Bruce Linton, the CEO of Canopy, told this story, and I thought it was really worthwhile, and it helped me understand the business of cannabis. He said, cannabis investing right now is like investing in sugarcane companies at the turn of the 1900s. Okay, it's a cash crop. Now, you could put your money, think about this, right? You could put your money in the growers, you could put your money in the extractors, or you could put your money in guys building brands with intellectual property. The growers made money for a couple of years, and then most of them went belly up, and only a couple big guys remained at the end. Then you had the guys extracting sugar from the cane, right? And that was great. They were putting it on store shelves and, on your table. And that worked for a while. You could have made some money in the stocks. I'm not saying you can't make money in the stocks. But when I invest, I'm looking for a 15-year move of 10,600%. Or a 7-year move, right, where it's up 15 times. I'm not looking for a 2 or 3-year move where maybe I can make some money and then the business gets commoditized. I want to avoid commoditization. The best way to do that is to find companies with brands and IP. Okay? So, if you think about the sugarcane business, who made all the real money over the years? It was a company who, Domino's dominated, okay, the extraction process. Okay? Everybody else pretty much went bankrupt, and that's the guy who was left standing. Razor thin margins, not a great business, not a great investment over time. But think of this. There were guys who figured out, let's put this sugar, right, into a carbonated beverage. Let's get a recipe. It's intellectual property, right? We're going to put it in a vault in Atlanta, right? We're going to tell nobody can look at this. Coca-Cola made a fortune for investors, and it still is. It's still a great investment, right? So we want companies with intellectual property building brands, okay? And that's what Canopy's doing. That's why I say Canopy's the centerpiece for me. That's what they're doing. They've got a war chest of cash from Constellation Brands. They have intellectual property around how they get THC into the carbonated beverage, and they're going to probably put that recipe in a vault. Okay, so that's why I focus on that company. Okay, now, let's get to the U.S. business. We were talking about this, you and I. There's a big difference between U.S. cannabis companies and Canadian companies. As exciting as Canada is, I think as we stand and sit right here today, there's a bigger investment opportunity in U.S.-based cannabis companies. Okay, and I'm going to share with you why. Federal law prohibits businesses from working with marijuana. There are U.S.-based cannabis companies. Because the federal law is the way it is, the state allows a company to get involved. The federal government says you're literally doing something illegal. Therefore, you have no access to banks, no access to capital. You can't go to Morgan Stanley and say, please raise capital for me to go make an investment. Sorry, can't do it. Why? Morgan Stanley would be in violation of working with a drug dealer. That's basically where we're at right now. It's absurd. But it creates incredible opportunity for investors because it's changing. It's changing. There's 2 major laws that Congress is working on with massive bipartisan support. When I say massive, that's not hyperbole. There's a States Act right now, just came out of committee, now it's going through the House. It was sponsored by 151 House of Representatives from both sides of the aisle. It's the single biggest bill in history of sponsorship, right? Because they all see the gap of poll, and they don't want to be the ones that have to go up for election in 2020 and say, I don't think cannabis should be legal. So they're all behind it. This is government, right? We're going to get to risk in a minute. Who knows the timing of this? But that's one bill. It just made it out of committee with a huge amount of support from both sides of the aisle. The second bill is the Safe Banking Act. I personally think that's the first one that's going to make it. Because that doesn't require really the federal government to say anything about marijuana. It just says, hey, this is a fact, by the way. Let me tell you this. This is a fact. Cannabis companies in the U.S. right now, they have to literally walk bags of cash to the IRS building to pay taxes because they can't use the wire system because banks won't let them because it's illegal. It's ridiculous. And so, I mean, it's just ridiculous, okay? So there's a Safe Banking Act that's making its way through Congress. Why is that important to me? I look for watershed events that change perception and allow institutions to put capital in the market. It's a fact, guys. Mutual funds and exchange-traded funds in the U.S. and in Canada cannot buy U.S.-based cannabis companies because they violate the laws of the New York Stock Exchange and they will get delisted. So we're buying stocks that mutual funds and ETFs can't buy. And a lot of big institutions. I was talking about CalPERS, I was talking about, maybe sovereign funds are different, but CalPERS and endowment funds, they're not buying US-based cannabis companies, they're buying Canada-based companies like Canopy, because that doesn't violate any federal laws.
Can you say that again, like the statement, the first statement that you said, the mutual, you're saying mutual funds?
This is very important. This is very important. I'm glad you asked me, okay? Because this is what puts stocks up. When mutual funds and CalPERS and big institutions put money in a theme, the stocks go up multiple times over years. And the fact of the matter is, right now, it's illegal for them to do it. If a mutual fund were to invest in a US-based cannabis company, they could be delisted by the New York Stock Exchange because they're doing business with something that the federal government thinks is illegal. Okay, the Safe Banking Act changes that.
That's one of the three bills.
Yes, yes. So we're talking about, if that happens, it's a watershed event. It doesn't mean all the money shows up tomorrow. It just means, okay, school's out.
So someone's realizing that it's ridiculous for Canada to lend all the money.
Yeah, exactly. Yeah. And Canadian companies are just as upset because they want to invest in the U.S. and they can't. They'll be delisted from the Toronto Stock Exchange. The Toronto Stock Exchange is like the New York Stock Exchange of Canada.
How are U.S. companies actually trading?
Yes, that's a great question. Let's get to it, okay? Let's get to it. All right, that's my next topic, all right? Let's get to, all right, I'll get to it now. The U.S. cannabis companies cannot list here in any major exchange. So the exchange they're listed on is the Canadian Stock Exchange, called the CSE. It's an offshoot of the Toronto Stock Exchange. I don't know if you probably would know this, your husband certainly would, but way back when, there used to be a New York Stock Exchange and something they called the Garage, which was the American Stock Exchange. And smaller companies would list there that didn't have the prerequisites to get on the New York Stock Exchange. It was like an incubator. Okay, they called it the Garage. And it literally was a garage. If you were down in the New York Stock Exchange, you see it. It was an old garage. They set up the.
Someone in the audience is concerned you're out of line.
Oh, brilliant! Thank you. So the CSE. Now here's the thing about the CSE. So they list on the CSE. That's where they list. Some of them are on the Venture Exchange, but let's don't get into that right now. Most of the companies that I think that I'm putting my own capital in are listed on the Canadian Stock Exchange, okay? And it's simply a function of the fact that there's nowhere else for them to go. The States Act will change that. The Banking Act will change that. That'll be watershed, will have to be involved. Now, can you wait for that to happen? Certainly. Is it safer just to buy MJ and Canopy and wait? You can do that. I mean, the stocks will be up, I don't know how much the day the news comes out, because these stocks are crazy. But you can buy it that day, because this is a multi-year investment plan we're working on. We're not looking for a day trade. But for my money, I'd rather be involved early and now when the reward is big enough for the risk I'm taking. Every decision I make when I'm investing, I ask myself, is the reward worth the risk? Because the risk is always the same. I don't care what you're investing in. People were hiding money in General Electric. How'd that work out for them? I hope it wasn't anybody in this room. right? The stock went from 50 to 5. Do you feel better because you lost money in a name like GE? It doesn't feel better to me. If I'm going to lose money, at least let it be when I'm taking a shot at a whale. I mean, if I'm going to invest in GE, I may as well buy the S&P and forget it. What do you expect to get? What's the reward investing in GE? Maybe you're up 7% a year. Okay, fine, buy the S&P. And don't worry about management of GE totally messing up a wonderful business. But for my money, I'm looking for investments like Yahoo that are going to go from 30 to 470 in 7 years. So my reward is worth it for the risk that I'm taking. And for me, I use stop losses on everything I do, guys. So I literally know what my loss is, no matter what stock I'm buying. I could buy IBM, GE, or a cannabis company. I pretty much have the same risk, because I stop my losses when I'm wrong. And I come back around and invest again. This is how I am. So why would I ever do something where the possible reward is small versus a reward like this? So the US-based cannabis companies, they break down like this. This is for me, right? I'm telling you what from the work I've done, what I find most interesting, where I want to put my capital. I'm certainly not saying you can't do other things. You might find your own name, and you know, I wish you the best of luck. For me, I love the retail dispensary business. It's an easy business to understand. It's just a retail store. And I'm going to get to this later. We're going to walk through. I handed out pads, or maybe you have your own. I'm going to walk through with you, step by step, how to model the revenue of a retail cannabis company in the U.S.
Are you talking about at the dispensary level?
The dispensaries, all of the dispensaries, take that back. Most of the dispensaries are owned by public companies that are listed on the Canadian Stock Exchange, right? So you might know a dispensary called Rise, for instance. I don't know if you've heard of Rise. Rise is owned by Cresco Labs. That's the name of the company. It's the stock you buy. You buy Cresco Labs, they have dispensaries called Rise, right? So there's a whole list of, and this gets back to what you were saying about California. I want to get back to this, okay? This is a perfect example. This is not going to be easy, guys. There's going to be mistakes. There's going to be problems. Some companies are going to go out of business, right? I bought Yahoo. What if I bought Pets.com? It was a cute little sock puppet, right? Remember that? They're going to be selling a bunch of dog food. How could they miss? The company went bankrupt, right? Everybody was trying to do the same thing. So this is going to happen again in this investing cycle like any other investing cycle. So MedMen is the biggest dispensary company in California, all right? They're about to need another capital raise. What that means for you all investors is it means you're about to get diluted. So your shares are going to go down. We don't want to invest in companies that are going to dilute us. That's why I love Canopy, right? $5 billion in the chest. They're not coming to the market anytime soon. Why would they do the secondary? What's the point? They got all the cash they need, right? Okay, I digress. So MedMen was like, when I was doing my research, they were so heavily involved in California, and California, in its infinite wisdom, has almost, the lawmakers in California, I don't want to digress, okay, but they've almost ruined the business, right? They put 40% taxes on the marijuana business. And now they're shocked that the black market's doing well? It's ridiculous. I mean, the lawmakers in California are just clueless. And I just saw the other day, they're talking about it, guys. They're going to fix it. They're going to make it 35%. 35%. I mean, they're just clueless. They were the first to do it, and I respect them for that. They were early. But the rest of the country's learned from California. California gave away licenses to anybody who wanted them. So they gave too many licenses, and we all know how that works. All the other states, as they've gone to medical and recreational, are much more methodical about how they hand out licenses. And so I like other states. And so I'm focusing on US-based cannabis dispensaries, really they're retail companies. You call them dispensaries, I don't know, maybe that works for you, but for me, as an investor, I look at retail companies, right? Do I want to own shares of Levi's? They just came public. Right? My son's name is Levi. Maybe I should. Right? He was very excited, actually, because the symbol was L-E-V-I. So we bought some stock, put it away for him. Anyway, I digress. So what I'm saying is, they am I saying? I start talking about my son and I forget. I'll tell you a story.
You started on US-based companies, the retail.
Thank you. Okay, so what I'm looking for are, I like retail businesses. They're easy to understand, and these are the names that I've identified that I like, okay, for my portfolio. Let me tell you something, guys. You can do your own homework. Take what I'm telling you, go listen to conference calls. Anybody could go online and listen to conference calls, and you can hear what the management says about their quarterly earnings. You don't have to understand finance, just listen to what they're saying. I was on a call just yesterday, Organigram, don't write that down, I'm not buying that stock yet, so I don't, it's something to look into, I don't know, but Organigram, the biggest thing about that conference, I listen to every conference call I can get my hands on, even if I'm not buying the stock.
YouTube, how do you get to a conference call?
In Organigram's case, you go to their website, or any case, you go to the website of the company. So you just put in the name Cresco Labs. You say Cresco Labs, you Google Cresco Labs investors, or investing, right? And it takes you to the investor web part of their website. And then you just have to search sometimes, you read news stories, you look for quarterly earnings, you click on that news story, and usually there's a link that'll take you to the conference call, and you can hear the management tell you their story, and you can hear analysts ask questions. And you learn all kinds of stuff from them. Like today, or yesterday, Organigram, I'm not that interested in the stock right now, but the guy said something that really interested me, okay? He said, the amount of demand for CBD right now is through the roof, and they cannot, not just them, the entire industry cannot keep up with demand. Ooh, my ears perk up at that. Let me tell you why, okay? And you can write this down. My favorite U.S. investment right now is actually not a dispensary. I should get back to the dispensaries just to let you know where they are. I will. My favorite investment is that, you want to call it out, honey?
Charlotte's Web.
Charlotte's Web. Charlotte's Web. Let's go over real quick why Charlotte's Web is my favorite investment, okay?
How many stores?
No stores, not a dispensary. You're right, I switched, okay, I switched.
Okay,
I moved on.
where are we at now? We're in converters? Or what do you call them?
No, they literally, all they do, Charlotte's Web, and I should finish dispensaries, so, because you're right, I switched, okay, so forgive me. I just got so excited. Charlotte's Web, the best way to understand it is they are simply a hemp oil extract company. They grow hemp, they extract hemp oil extract, they don't call it CBD, right? For various reasons we can discuss. Wasting time right now. They like to call it hemp oil extract, okay? Basically because the FDA has not ruled whether or not you can call it CBD, okay? The FDA thinks CBD is a drug because they approved it for a company called GW Pharmaceuticals. So anyway, Charlotte's Web, let me tell you why this is my favorite investment. And maybe you're starting to get the theme, okay? It's not because necessarily their business model. It's because I like to get involved in a company when institutions are putting money in. Okay? Now, the other watershed event happened last year. We had Constellation Brands, we had Altria making massive investments, and in December we had the Farm Bill, right? First time since the 1930s that we could farm hemp. Woo. Okay? Now, why is that important? All of a sudden, Charlotte's Web, which trades on the Canadian Stock Exchange, because when they came public, that Farm Bill hadn't been passed. So they were still doing something illegal federally. So they had to go public on the Canadian Stock Exchange. Okay? CWEB, but it really depends on the service you're using, sir, so be careful. CWEB sometimes pulls up a Chinese internet ETF. Okay, so look at the name before you click the button, right? All right, make sure, because it could also be CWBHF. Okay?
What was that again?
It could be CWBHF. It depends on where you are. Okay, if you're buying the Canadian Stock Exchange, which I do, I buy CWEB. I want the Canadian stock. But there's like a mirror stock that trades here in the U.S. It's just like a mirror for U.S. investors. And it's CWBHF. But it's exactly the same investment. You wouldn't know the difference. I just happen to buy CWB on the CSE. So this is the reason why Charlotte's Web is my favorite idea right now. I like to put money to work when there's a watershed event. December, we had the Farm Bill. That made their business legal. It's just a consumer package company. I love the management team. They just brought in 2 new guys, one guy from Johnson & Johnson, one guy from InBev, right? The guy which is Budweiser, okay? They own Budweiser InBev. So they got guys who understand consumer packaged goods, so that the original management team realized it's time for us to step up our game and bring in guys who can get us to the next level. Okay? But this is what really excites me, and I love about it. 2 weeks ago, I told you already, ETFs and mutual funds can't buy these stocks. They trade at the Canadian Stock Exchange, and they can't buy these stocks. 2 weeks ago, the largest ETF company in Canada petitioned the Toronto Stock Exchange, okay, to allow them to buy Charlotte's Web for their ETF, which is a cannabis ETF. They said, why can't we do that? The Farm Bill was passed and it's legal. And the TSX said, okay, do it. So basically, let me get this straight. Let me just make sure I understand this. There's one U.S. cannabis company that institutions can now buy. At the moment, right? States Act passed, things will change. But for right now, mutual funds, ETFs, CalPERS, okay, guys who can't violate federal law can buy shares of Charlotte's Web. They couldn't buy shares in November. In December, they passed the Farm Bill, they can buy shares.
And they're buying that on the Canadian exchange?
Yeah, it's the Canadian Stock Exchange, CSE. And this is,
Did they get a bump?
sorry?
Did they get a bump, in the last 2 weeks?
Oh yeah, the stock's been doing look at the chart, you'll see, it's doing well. But, and so for me, it's kind of the bellwether of US-based cannabis companies. If it starts not doing well, you know the other ones really won't do well. Because this is literally the only investment that mutual funds, ETFs, and the like can put money into. Now, I'm not saying they're all going to do it right away. Right? The Farm Bill was passed in December, and only 2 weeks ago did the ETF, the largest ETF company in Canada, get this ruling from the TSX. So nothing happens as fast as we want it to as investors. You know, everything always happens weeks and months later. All right? But anyway, so I love the business of Charlotte's Web. I happen to use the product, full disclosure. I think it's great. And I see for at least a limited window the potential for a lot of money to come into the stock, because there's no other way to get access to these stocks until the States Act passes, you know, or the Safe Banking Act. But even then, it'll take another 6 months before big institutions feel comfortable buying these things. So right now, hey, let's be honest, Charlotte's Web is doing nothing wrong. It's farming hemp, it's totally allowed. They're producing hemp oil extract, great. And the revenues are, the business is good. The business is growing at the speed it should be growing at this moment. I'm going to talk about risks in a minute. We'll get back to that. Okay? So, sir, let me just get back to retail dispensaries. You can just jot these down. There's a handful that I like. There's many out there. I've told you MedMed I don't like. You know, do your own homework, but you know, we've got TrueLeaf here in Florida. We've got Cresco Labs. TrueLeaf, like, you know, TrueLeaf, right? Cresco Labs. There's a company called Acreage, which I find interesting only because they have an incredible board of directors. Go look at their board. Go to the website. Acreage, yeah. Go look at their website and look at their board of directors. It's a who's who of politicians who are like connected.
In Florida.
I'm sorry?
You say all in Florida?
No.
Okay.
TrueLeaf is the biggest in Florida, but TrueLeaf is also in Massachusetts and Connecticut.
I'm sorry, these are US companies that are not listed?
Correct. These are US companies, okay, that are listed on the Canadian Stock Exchange only because they can't list anywhere else. Let me tell you something. What's your name?
John.
Jonathan? Let me tell you something, Jonathan. I would never stand in front of a group of people and tell you to buy the Canadian Stock Exchange under any other circumstances. It would be insanity. I mean, I like to put, you know, risk in my portfolio, but I don't run out there and buy Canadian Stock Exchange stocks. right? I like to stay in the US. There's a unique opportunity right now. They can't list anywhere else, but they're real businesses. Most of the time, stuff that's on the CSE or the venture exchange in Canada or the pink sheets in the US, they're called bulletin board pink sheets, they're there for a reason, right? They're there for a reason. It's dangerous. Okay? These companies are there because they can't go anywhere else. I imagine what we're going to see with Charlotte's Web in the next X amount of months, guys. I don't have a crystal ball. I don't know when it's going to happen. I do know management's talking with the TSX to move from the CSE to the Toronto Stock Exchange. That would be a big step up for this company because the Toronto Stock Exchange is like the New York Stock Exchange in Canada. Legitimate institutions can buy it. It takes them off of that skeptical look of what are you doing on the CSE.
So
I get it, I get it.
with the Farm Act in December, it's, why won't Charlotte's Web be listed in the US Stock Exchange then?
Good question. They're working on it. I mean, if you ask management that question, listen to the conference call with earnings, they say the first step is to get listed on the TSX. They're in the process of literally filling out paperwork. I don't know what that means on timing. That could be next week or it could be a couple of months. I don't know. And they won't tell you this. We don't know either. We're going through the process. We're filling out paperwork. And then they're going to get listed on the New York. That's what they're working on.
So they're going from the first one, the CSE,
Yes.
to the TSX,
Toronto Stock Exchange.
to Wall Street, to the New York Stock Exchange, and
Yeah.
then they are only exclusively traded on whatever exchange that they're on at the time.
Oh, yeah, they'll move. But the shares that you own will move.
Yeah.
You're not going to get left behind.
Okay.
You're going to make a lot of money on the shares you own, but they'll just move to a new exchange.
Okay, so it takes
It
it with
doesn't-
them.
Yeah, it
Takes
won't
the
change
investors with
it won't change your investment at all. All it does is it allows big institutions to start buying the stock.
Which is what they want to generate the capital.
Exactly. And they want to access capital markets, right? They want to be able, maybe Charlotte's Web sees an acquisition, they want to raise capital to do it. They can't raise capital right now. So they're in that process.
So is there any reason to do it in Canada versus the mirrors?
No, you can do the mirror, it's the same thing. You're getting the same shares. Don't worry about that. They're all connected. Yeah, it's real.
And do you do anything special to invest on the Canadian stock? Exchange?
Good question. We're going to get off topic a little bit, and maybe I'll talk to you about that later. Come up to me later and I'll explain how it works, okay?
Is the mirror stock sold on the CSE as well?
I'm sorry?
Where is the mirror stock sold?
That's over the counter and it's not the New York Stock Exchange, it's kind of like the bulletin board, but it's connected to the CSE, so it's a legitimate stock. So CWBHF, you could own that, you could own CWEB it's the same thing. Yeah, you're getting this exact same investment. You're not going to lose out when it changes. Okay? So anyway, those are my favorites, right? Cresco, Acreage, Curaleaf. All right, I like Curaleaf.
Purely?
Curaleaf, C-U-R, Curaleaf.
So like Cresco, how do you spell that?
C-R-E-S-C-O, Cresco Labs. Okay?
True Leaf and Acreage.
Yeah. These are basically, those are my favorite names. Now, look, we've I want to wrap up, right? We've been had here for a while, but let me just talk about two things. First, I want to talk about risk, and then we're going to do this little exercise together. And I'll open it up for questions, okay? More questions. Guys, there's going to be a lot of volatility. I don't even care if it wasn't the CSE. When you're investing at the beginning of an investing super cycle, what that means is you're early. There aren't big institutions let me try to explain this. Stop me if, let me try to help you understand. Stocks go up over a long period of time. And I've said it before, it's worth saying again. Not because I buy 1,000 shares. It's because CalPERS wants to buy 10 million shares. Okay? They can't buy it all at once. So they buy it little bit every day for months. And they support their position. So when the market starts to break down, and who comes in and starts to support stock? It's guys like CalPERS who have billions, and they have 10 million shares to buy, and they feed it out. Sure. And you get this uptrend in the stock over a long period of time, like this. So at the beginning, those institutions institutions aren't there. There's a lot of risk. Let me tell you, I've been saying to you all night, oh, Yahoo went from 30 to 470 in 7 years. Woo, I made 15 times my money. Let me tell you something. 3 months after I went to that meeting, the stock went from 30 to 15. Okay, I was down 50% of my money. I'm walking around like, what just happened to me? I thought this was the greatest idea ever. It was. Volatility was fierce.
So you
Okay?
have stop losses on everything?
Oh,
so-
back then in 1993, I don't know what stop losses are, my friend. I've learned. I've learned. Let me tell you. No, my dad taught me that. I don't know if you guys know John C. Reilly. You know John C. Reilly, the actor? The movie called Cedar Rapids. Anybody know it? All right, well, I'm going to quote it for you, all right? I love this quote. He says, I got tiger scratches up and down my back from 30 years in this business, okay? And I'm sharing with you tonight how to dance with a tiger. Go watch that movie, look at that. Anyway, okay, so there's risks. Aluminum, up 10,600% 15 years. There were multiple 50% corrections. I traded around those. I learned, right? Now, what I like to do, just so you understand how I run my own money, if it's an investment that I think can be significant over a long period of time, I have a core position where I can handle the volatility. I don't get out over my skis. I don't get all excited from an analyst meeting and run out and just, go headlong and prep, right? I don't do that. I have a core position, and then I trade around it. So I wait for weakness, I buy weakness, and then I always sell some into strength. Because that gives me the courage to hold my core position over time. Right? You never know when something's going to drop 50%. So you can use a stop loss, and you can say, I'm going to cut it. Right? There's nothing wrong with that. But what I like to do with longer term investments is to hold a position core and trade around it. Okay? So, all right, so I just wanted to give you those thoughts. Don't think it's going to be easy. It's not going to be easy. Right? It depends. Oh, and it may be, although I'm less worried about the government now, I'll be honest with you. I'm less worried. It's the only thing that has bipartisan support. I'm really less worried about it. It's going to happen. Just follow the money. Follow the money. There's too much tax revenue coming in for the federal government not to get a piece. I'm really not worried. I don't know when, right? It could be a couple months. It could be after 2020. I don't know. But this will interest you. When I ask management teams of U.S. retailers what's their biggest fear, what keeps them up at night, you know what they tell me? That the States Act will pass too quickly. Why is that? Why is that? Because they're building wealth and nobody else can compete with them. Okay? When the States Act passes, big guys, drug companies, packaged good companies, they're all going to get into the space. And right now, there's a finite amount of players bidding on licenses, gathering up acreage, loves to gather up licenses. That's their thing. They've got licenses from Washington State all the way to Maine. They cover the whole country. All right? Whereas someone like Trulieve is more about the user experience, and that acreage is just give me as many as I can get. And when they finally change the laws, I'm going to sell out. Someone will take me over for all my licenses. Okay? All right, so let's just grab your pen and paper, and I'll wrap up with this, because I think it'll crystallize for you why I say we're at the very beginning of an investing super cycle. There's nothing like running the numbers to really put that into stark relief. I went to a dispensary in Florida. Went to a dispensary. My dad and I sat down. We go meet with the C-suite people of these companies, which is important. But we've always found, just like the CVS story, it's best to meet with the guys on the ground level who are in the trenches doing battle. Okay? So we went into a dispensary and we pulled aside the manager of the store. And he was a great guy. He sat down with us and spent an hour and a half talking to us. I'm going to share some of the information with you right now. All right? So write this down. Grab your pen and paper. Get ready. Here we go. This is how Wall Street works up numbers. And by the way, no one's really bothering to do that right now because they trade on the CSE. So you don't have Morgan Stanley or JP Morgan or any of these guys writing research reports. This is such a unique opportunity in investing. Usually, everybody in this room, including myself, we don't get to invest in Google when it's private. We have to pay $85 for it, it comes public. You see what I'm saying? Right now, because of the federal laws, this is like investing in private equity. We all have a shot at it. So this is what we did. We went in there. It's 2,700 square foot store. It's just a retail store. Okay?
Pretty big store.
Say it again?
Pretty big store, right?
Yeah, 27 square feet. Yeah, really nice store. Walk all around. It's a great store. They can service 500 people a day. Write down 500. We're going to do some math here. Okay? Their average selling price is $250 a person. Let's multiply that times 500. Okay? That's $125,000 a day from one store. Okay? Let's keep going. Let's multiply it by 5 days a week. Even though they're open 7, I'm going to be conservative. 5 days a week. $625,000 a week times 50. We could do 52. I'm going to be conservative. 50 weeks. Anybody got their calculator? Are you ready for this? $31,250,000 off of one store. Off of medical marijuana only, not recreational use, medical marijuana. Okay? They have licenses for 49 stores in the state. You want to keep doing the math with me? That's $1.5 billion.
How much is a franchise?
No, I'm serious. It's $1.5 billion. Now let's look at the value of the company for a minute.
What security company do they use? Is this true?
I'm not sharing that with you right now. I'm literally buying the stock for myself and my investors, and so when I'm happy to tell you Charlotte's Web. I told you I already own it, but this one I'm buying, and they're not very liquid, so I have stock to buy, and I'm working on it. This is true though. This is the business model. Some will vary, right? Some are going to be higher end, some are lower end, some will vary. This is the company I'm working on right now. Okay, so let me just tell you this is a fact. The Canadian cannabis companies trade at a market multiple of 10 times 2021 revenue expectations. Okay? So analysts have worked up what they expect Canopy or whomever, what they expect they could do by 2021, and the stocks are trading at 10 times that revenue expectation. Okay? Now this is why I like U.S. cannabis companies. These numbers don't even make sense. I'm sharing them with you. It sounds ridiculous, but this is the opportunity, so I got to share them with you. Okay? This stock is trading with a $400 million market cap right now. Only $400 million. Why? Because it's trading on the CSE, and there aren't big institutions buying it. But with those numbers I just worked up, okay, the stock should trade at $1.5 billion 2021 revenue expectations if these numbers prove out. And that's what Wall Street does. They come up with expectations. It should be trading at $15 billion market cap, right? 1.5 billion times 10 times revenue. And that's only fair. That's what the Canadian guys are getting. It should be traded at $15 billion market cap. It's $400 million. Let's say I'm wrong. You look skeptical. Cut my numbers in half. Okay, a $7.5 billion market cap. It's traded at $400 million. You want to cut it again? It's ridiculous. The opportunity is ridiculous. Now, why is it ridiculous, right? There's risk. We didn't get the States Act passed yet. We haven't had, the Banking Act passed yet. We're still on the CSE. It's the government, right? These are the reasons why these stocks are traded at tiny multiples. Not even multiples. They're at discounts. They're traded at discounts to revenue. So, in closing, let me just say, I hope I've shared with you why I feel this is such an investment opportunity. I wanted to come out and help Michelle out and share with you guys, HHC, what the opportunity, that's how it all got started.